Deanne, I want to talk about, and John touched on this, the massive potential of big super funds to be able to change our city. We don't want this money going overseas if we can help it. So if I can start on a more macro level, is Sydney a good place to invest?
Oh, absolutely. And maybe to give you the context of why I say that, a couple of things. First of all, you're totally right. From a superannuation fund perspective, I mean, the super system is currently $3.5 trillion. And to put it in perspective, that's likely to get to $6 trillion by 2030. That is one of the biggest pools of capital in the world. Then if you narrow that down and you say, well, what's the sweet spot of many superannuation funds? They want to be as diversified as possible, but things like infrastructure, things like property, build to rent, for example, tend to provide really stable, long-term cash flow, which is exactly what you want in a super fund, because ultimately, take a member that joins today, they're not retiring until probably the 2070s. And so it's absolutely the sweet spot. And then you narrow that down, certainly like a fund like Aware Super, that's one of the biggest funds, but we are the biggest headquartered here in Sydney. We really want to do investments where they're really good returns, and we're very clear about that. But we also want that intersection of where does it actually have a really positive impact on the community, our members that we serve, where they live, where they work, where they retire. And so for us, it's that sort of double win-win.
And those things can work together. I think it's been proven as well. It's worth going over and talking about the investments that Aware Super has made. We're talking the ICC, Aware Super Theatre, that everyone will know, light rail, retirement, aged care homes. What have I missed here?
Yeah, I mean, many of you don't know so many of the assets around Sydney. Behind the scenes is probably a super fund or super funds, whether it's the airport, whether for us at Aware Super, if I just think about some of our investments, we've been one of the key investors behind Sydney Light Rail, Inner West Light Rail, behind the ICC, as you said, behind Bankstown and Camden Airport and the whole precinct around there. We're incredibly proud of the work that we've done we've really led the way in the build-to-rent sector and put a fair amount in sort of key essential worker housing. And then that's not to even begin on some of the private equity investors really helping companies sort of start up, scale up. So there's a lot of money of super funds sort of to put to work.
So affordable housing is one of the priorities at the moment. So how quickly can you invest that money? How long do you need to put in your calculations to wait for a return? And is it the best return for your members of affordable housing?
Yeah, for us, I guess, taking a bigger view, first of all, property has a real role to play in a superannuation fund. Once again, back to that, it tends to have longer term cash flow, pretty consistent, pretty stable. That's the sort of return you like inside a super fund. Then when we look at the property industry and we go, where do we want to invest? Ultimately, what we're trying to do is get a return of something like CPI plus 5%. If we can do better than that, that's even better. But ultimately, we want the best possible returns. For us, actually, one of the sectors that is really nascent in Australia but flourishing in markets like Europe and in the US is the whole build-to-rent sector. And that is actually quite nascent here in Australia. So when we started investing, we did a few pilots to look at how do we make, because ultimately our job is to get the very best returns, how do we get this to work? And what role can affordable housing play in that mix? So certainly in our whole mix, we definitely have affordable housing in areas, for example, like Miranda. We're doing one right at the moment in planning phase at St Leonard's, huge healthcare precinct where a lot of essential workers are. But the reality is that mix is dependent on the support we can or can't get from government. Otherwise, clearly we'd want to get full market rent.
As I understand it, you talk about Miranda, which is, southern suburbs from the Shire. Yeah. Proud of it. But you can only really make the numbers work in the cities, can't you? When it comes to regional remote areas, it just doesn't stack up for you. So what's your suggestion here as to how investment can happen in the regions?
Yeah, you're right. Certainly what we have done to date with, we've got 7 properties to date where they're sort of really large apartment blocks, and we've got a sort of a pipeline of about $1.5 billion. They're all city-based, and a lot of them are here in Sydney. We have not done regional for exactly that that point is it's very hard to get the returns to set up, but also, particularly when you're talking, I mean, Aware Super's 165 billion, you actually need the projects to have scale for you to get involved. So regional is definitely more problematic. That being said, there are major regional precincts where you've got sort of massive education zones, healthcare zones. So for us, there could be a real role, and this is exactly how do you get the combination of government, developers and big capital super funds that are long-term patient to actually work together. And for us, it would be things like looking at land, it would be things like tax incentives, that ultimately we need to get a certain return, otherwise we're not going to do it. We're very crystal clear, we want to be the top performing fund, and that's our role, that is our primary objective, but we also want to be able to get involved in areas like this to serve the community. So there's some of the examples from government, not to add also things like planning and speeding up that side that we've talked about that impacts city-based projects too.